Greetings, Jedi traders. David here of TradingFibs.com to bring you the weekly outlook for week 12, 2017. It is March 19th. Market set to open up here in a couple hours. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only, to support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, Jedi traders, Q1, what a ride it was. Looking at the ES weekly, been nothing but relentless price momentum upside, as we can see here on the chart, with the casual pullback on a daily chart. Perma bears have been littering the Twitter waves for months now, waving their bubble signs in hopes that the day will be sooner rather than later that they told you so. Count is endless, and the number of technical signals that have been broadcasted simply been run over and right through as we have pushed the limits of this market. Overvaluations, overbought, and the next big short, all common terms to make the headlines in hopes that they were the ones that called it first. Even to the extremes that World War III is brewing, which by the signs given by this well-respected and noted money manager may lead us there in due time based on their analysis of world events. Meanwhile, my IJR and TQQQ holdings continue to reap the benefits of this momentum move based on Jason Kelly's quarter rebalancing. Had I listened to any of the naysayers starting back in 2014, I might have missed out on the gains I have attributed over this market's rally, illogical as it may be to you. I keep it simple, Jedi traders, and while the IBD, Investors Business Daily, has solid research behind their fundamentally strong stocks, IBD 50, Can Slim, I don't have the need to chase the next IPO or individual company that will become the next, in quotes, FANG stock. The hopes of a deeper pullback would have been well timed to close out open gaps that I mentioned in my previous weekly outlooks, and the prospect of buying more into this rally instead of having to sell off to rebalance in the coming month have yet to be seen. Either way, one fact is for sure and will be rehashed for years to come: the rally that went against all the rules in the books. All right. So here we are, week 11 behind us. Let's take a quick look at the week recap. Make sure you check out the link here, which has all the links from all the posts from the previous week and each day, charts of the day. Let's take a look at some of those charts here. Taking a look at the ES here with this wonderful rally downside, price action holding underneath the 54 intraday, always being ready in both directions. Taking a look here on post FOMC, that was right. It was all about post FOMC announcement and quad witching. Price action there. It was the lift. All the charts in the green. What a reaction. Well, you can't all be in the green. Gold, the yen, and the euro all in sync with the indices. Eventually, we had a change of trend, especially on the indices for the week. Price action here towards the end of the week. We could see here to the downside. NQ on Thursday trying to make a go at it with deep pullbacks, but all in trend. 51.44 holding downside from one MML to another. And wrapping out the week, it was the yen on Friday actually getting the nicest lift as the indices pulled back. All right, let's jump into the charts as we're mentioning those daily gaps here and pullback after seeing the price action here on week 11. After closing out the quarter with the FOMC announcement, the indices futures continued to remain upside and continues to be this ongoing uptrend, holding above each indices perspective, EMAs, and key moving averages that we'll see here in a moment on the higher time frames. After price action pushing to those all-time highs, as you see here on the chart here, back at the beginning of the March highs at the beginning of the month. Is this perhaps the technical concern that the rally may be waning at this time, as we saw price action on the NQ, interesting enough, push back upside where the YM and ES failed to regain those highs back in the early March. So we could see price action obviously pulling back, closing out this huge gap, respectively, both on the ES. Here we see the gap set up in March, and the NQ also doing its homework here. Not as much of a gap here, but NQ really running it up to the all-time highs. And now the pullback here on post FOMC, we have the move up here, and then Thursday and Friday session pullback on both the ES and the YM, as well as NQ not regaining those highs up there, 54, 31, 50, 161, and 24 run. All right, let's jump right into the bigger picture as we do each week, and then we'll see where we are on the intraday. Let's start out with the weekly NQ here. Price action we could see here on a weekly chart has just been relentless back from last June. So giving cause to that, the fact that price action after stalling here on the major pivot, little bit of a stall here, major support resistance. These are the MML levels from support to resistance. Any pullback to major support is a 50% pullback. So nice setup back here from June. So when you're looking at the bigger picture, especially in an ETF, and you're saying, all right, triple Q, I'm in for the long, give yourself an MML chart. You're looking for the highs up here. So definitely on a weekly, we still have cause to get up there to that 56.25. All right, let's pull back here. Let's take a look at the daily, the 4-hour, and the range chart as we see. So keep in mind the weekly. Let's go back to that weekly for a moment. There it is, 56.25. Keep that number in mind. And so 56.25, well above the levels here of both the daily, the hourly, the 4-hour chart, and the range chart. So as we are at the range chart, and we go back to the daily gap, obviously 54.31 is a resistance here at the all-time highs. So on the bigger picture, NQ, as we're holding upside here, what levels do we have to contend with? Well, anything to the upside would be 54.68 up to 55.85 up here, 55.86. All right, 55.86. Again, come back to that bigger picture weekly, right? 56.25, well above. So we got some numbers to get above to get there. Anyway, to the upside, NQ on the range chart, definitely at the highs. Definitely at the highs up here on the reversal. Anything higher at this point on the bigger pick, we're looking at 55. First resistance up here at 68 to 07, and anything above that would be all the way up to 85. We can see here 55.46 on the daily chart lining up with the overbought here on the 4-hour. So that would be my first level to watch. Anything to the downside at this point, we would again be starting to look back down to former levels of resistance before, prior, now support. So be looking down to 53.51. Remember that 50 EMA, 50 SMA on the daily down here around 64.65. So line it up, line the charts up. You want to see when you start seeing lines that are lining up across the board. For instance, if it's resistance here, major support resistance here, 53.12.50 here on the daily, lining up with the 53.12 major support, that would be the first level of support that I would see downside, which would just be, that's right, that would just be the 50 SMA below. Any drop below that, we start looking at 5,000 would be a huge move downside all the way down to support here on the NQ. So something we will obviously watch through the intradays as price action can run in both directions. If we're looking for anything to the upside, again, we'll have to break some of these upper levels. All right, taking a look at the weekly YM price action. Again, a little concern here as we go back to the daily gap. We saw the price action high up here at 161. Weekly opening price last week was 867. Again, the pullback here, 2 days pullback after FOMC. The YM not being able to regain its footing to go back up and test. So we have a little bit of a pause here. 938 on the weekly chart there. So let's go ahead and take a look at the daily, the 4-hour, and the core setup. So keep it in mind that 938 is a reversal on the weekly. Might be just giving us enough cause to say technical setup, as I said in the introduction, maybe just waning here, maybe just waning. So anything to the upside, we'll be looking for 250 both on the daily and the range chart. before we get there, watch the 4-hour chart. To get to 250, we got to break through 938 and 94, 21094. Anything breaking above 211 will surely get to 250 by that point. Anything downside, we're looking at the 50 SMA on the daily chart. Look for the major support resistance. Always watching the 10-period moving average as we're just holding on by a thread here on the new contract as we roll into June contract here on the indices. All volume in the June contract. 4-hour chart also looking downside 781. So before we get down to 625, we'll need to break that 781 support that we saw there on the 14th of this last week. 625, keep that in mind. First level of major support, but we got to break the 781 first. And again, those levels back upside. All right, taking a look at the ES. Let's take a look at a big picture that we just saw in the weekly. The post-election Q1 here, holding at resistance right now. Do we pull back to 2250 or do we push it up to 2468? Well, let's go ahead and take a look at the daily, the 4-hour, and the range chart. Again, keeping in mind on the daily gaps, 2401 all-time high, but we got an open gap downside at 6550. 6550, which obviously is in between major support and support here on the daily. So 6550, we would need to lose our footing here at the major support resistance. But what we have down below on the daily as we hold here at the 2375, major support on the range chart. So looking upside, we have 2406, 2406.25 would be overbought in quotes on the daily, and 2406 here on the 4-hour chart would just be above the reversal. So how do we put this together? Here we go. ES to the upside, 2406. Before we get there, we need to break that overbought. 2390 is the level to watch for week 12, all the way up to 2402. We break that 2402, we get up to 2406, then we can start dealing with all-time highs all the way up to 2429. Case for the downside, start to look to 2359. 2359. If we lose that 2359, we'll start to look to the 50 SMA for support, which really we haven't seen in a long time. If you go back, the last time we even came close was back here in January. So watch that price action, which just started to lose its footing here in the last week or two on the 10 MA, but been able to hold on by a thread. So watch the 2359 downside. If we lose that, then we'll start looking down to the 50 SMA, and then watch the 2312.50. Anything below that, we'll start be looking down to 43.75, which will be well below the support here and already just above between the just around the 50 SMA. So that's where I'd be looking for the ES in both directions. All right, taking a look as we roll out for week 12, starting with the ES here. Again, on the smaller picture as we roll into Sunday's open, again, we'll reevaluate on the overnight. Price action for the short term here, 60-minute chart, up would be 2391, downside 59. Again, seeing if there's any congruency between the 60 and the 4-hour chart. Absolutely, we have the same levels here. So if we find the support here at 2375, remember, you can always tie this into the bigger time frame. So there's that 2375 major support. If we find support here off the major support on the 4-hour chart, and we find it here in the 15-minute, then we kick up here to 79 all the way up to 82. If we break the upper levels on the 15-minute charts, we start looking to the 60-minute and the 4-hour chart, which will be supporting the move on the bigger time frames. All right, taking a look at the YM, 4-hour, 60-minute, and 15-minute chart. Again, don't forget, YM, we're holding at that resistance level. Major support here, 859, 859, same picture both on the 60 and the 4-hour chart. Upside 938, downside 781. If we find we're holding here at the major support at 859, which is holding at the lows on the 15-minute chart, look for the week to open upside. We'll be heading up to 898, 918. Anything Downside, we'll obviously start looking down to 781 as the first levels, and our 15-minute charts will reset. Jumping over to the NQ, taking a look at the 4-minute, 60-minute, 15-minute here, as we see the 60-minute after a reject up here last week on the pullback of the NQ. Go back to the daily gap. There's your 2 bars pulling back. Take a look at the NQ as we pull back off the resistance, 54.29, 54.30. Momentum would be pushing us back down to 53.90 at this point. Again, we got the lineup both here on the 60 and the 4-hour chart. If we find the support here to start out the week on the NQ downside around 54.08 down here, around the major support resistance, we'll find ourselves moving back upside to 54.15, 54.19. Again, the 15-minute chart will reset itself a little bit quicker than the other charts, as what was once major support resistance can then become support. That's something you need to watch intraday. Love the bigger pictures as they hold more dynamic. They don't move as much. So keeping to these levels, anything to the upside, there's our numbers. Anything to the downside, we'll obviously have a reset on the chart, and we'll start to look down to 53.90 to start out the week, 53.91 all the way down to 53.51. You line that up again with the bigger time frame. Go to the daily, the 4-hour, and that's how we do it. Again, let's show the 2 charts here. Again, 53.91. Where is 53.91? It's down here around overbought. Anything lower, again, would be around breaking these levels here. Come up here to the 60-minute chart. We start to look to 53.52. And you look, where does 53.52 line up? And that would be your resistance here on the range chart. And starting to look downside, eventually if we broke there, we'd start to look to 53.1250 on both the 4-hour chart and the daily chart. All right, let's take a look at some of those key futures markets that we look at each day in the screen share. Again, all across the board here, we have the daily chart, the 4-hour chart on the crude 4-hour chart, 2 different time frames here, and the 60-minute. Appreciate. Let's go to the daily gap on the crude here. Daily CL, again, open gap downside 46.51 as the crude found some footing here this week. Here we see the crude holding in a downtrend from the MML highs off the upper levels, losing ground to the 50, bouncing back up. So, great example here. We see the bounce here off the daily chart. We ask ourselves, why? Why did we bounce back there? Well, we take a look at the smaller time frames. We go to the 60-minute chart. We see the bounce off the lower levels down here as price action lifted back upside, and now finding some consolidation on the new contract on the crude. So again, same picture, 4-hour here, 60-minute here. The bounce off here was obviously not going to get down here to 46.88. We found that it bounced off the lower time frame. So upside, major support resistance, we're back looking up at 50. If we can hold above the 200, if the crude is unable to break upside, we'll watch for the pullback here to at least 48.44. We break that, then we head down to 47.66, and we start dealing with, that's right, closing out some of those daily gaps downside. All right, let's wrap it up here with the crude. Gold, I apologize. Taking a look at the gold as price action on the gold, holding between the 50 and the 200. 4-hour chart here, holding above the major support resistance on both of these charts. 2 different time frames here. Again, same picture as the crude. As we see the lift here, never getting down to major support resistance. That's where we tie it into the smaller time frames. Here we can see on a 4-hour, different MML levels with the GC on a 60-minute. Here you go, back last week, midweek, gets the lift off the support, and works its way back upside. So looking upside, look to 1234. If we can hold above the 50, all the way up to 1250. If we can't hold here, we start looking back down to 1218. See if that lines up anywhere here. Yep, major support resistance across the board. That will be your first level of support. Anything downside from there, start to look to 1203. 1203 would obviously be losing support here off the 50, and then back down to about 1187.50. All right, Jedi traders, looking to next week on the Kana Day calendar. Here again, it is VIX levels continue to remain low as technical indicators by my charts have just enough reason to go in either direction. I know this is not what you want to hear, but consolidation is exactly that. Key events in the market this week will include Federal Reserve speakers, which can surely move the market on any given day. Don't rule out Washington politics and worldly imbalance to set the market in motion, which by any other given year may not be as newsworthy, but seem to be playing a bigger role in 2017. So the bottom line for week 12, watch for any pullbacks to the open gaps on the YM or ES. If the daily lows continue to be bought and lifted, trend will remain upside and may retest the prospective all-time highs. All right, that concludes an insight into the weekly outlook and technical momentum for the key futures markets. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. Talking about media outlets, I want to give a shout out again to Jason Kelly, giving you the macro view each week in his weekly newsletter. Great stuff coming out of there. Also his YouTube channel here at the Kelly Letter. Check it out. Also for the intraday perspective, check out Ken Polcari's morning newsletter. Wake up, stock up, eat up, right there with his daily recipes. Put that email address in there, giving you an overnight view. And as well, both daily and for the weekend, Shadow Trader giving you some good perspectives, including taking his analysis here in the mornings, pasting it on my own chart for the market profile, which gives you a good overall sense where market action was prior into the previous session, as well as the overnight balance. So great three sources for their both intraday and the macro view to put into your routine trading routine. Hey guys, my mantra is one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter and at Trading Fibs. And as always, I leave the crystal ball to the experts. I only watch what's in front of me and on my charts. And as always, leave your bias at the door when trading. Hey, for those of you that are interested in joining us in our community of like-minded traders seeking those highest probability setups, feel free to email me, David at tradingfibs.com. You may join us on any Thursday or Friday to view the live chart setups as they happen in the trading day. Have yourselves a Blue Zone week wherever you may be. Good day, good night, and good trading to you.